Good day, everyone. Welcome to Moneycontrol.com's pre-budget panel discussion. Now, in the last few days, we have heard a lot of chatter in the market about what measures and initiatives the government would think to bring in the upcoming budget. We've just got 3 more days when the union government on 1st of February will present the budget. Now, what can you expect for the banking sector specifically, looking at the growth that the sector has recorded in the past few quarters? Now, to discuss that, Moneycontrol has got a panel of industry experts. Firstly, we've got Mr. Amit Mohan, who is the President, Logistics and Infrastructure at Kotak Mahindra Bank. We've got Indranil Pan, who is the Chief Economist with Yes Bank. We've got S. Krishnan, who's the MD and CEO of Tamil Nadu Mercantile Bank. And we've got Mr. Vinod AM, who's the GM and Head of Treasury at South Indian Bank. I thank you all for joining our panel discussion. Alongside these, I've also got my co-panelist, Harsh Kumar. So just to start our discussion, I'll just put the question on the floor that though we know that it's an interim budget, so just I'll start with Mr. Krishnan here, just to get a sense as to how are you looking at the interim budget when we look for any measures or any initiatives for the banking sector as such?
Thank you, Mr. Jitin. Good afternoon to everyone. As Mr. Jitin was telling that, this is basically an interim budget, so vote on account. So what I expect is that there may not be a very major announcements in the budget. However, the government will like to continue its focus on the schemes and the policies which are already announced, while sticking to its path of fiscal consolidation. So that is what is more important. I expect that the focus will continue to be on the capex. So I expect that there will be a focus on the government spending something on the rural growth, how they can give. The subsidies in general are expected to come down. However, the fertilizer will continue to be there, gas and fertilizer. The food subsidies may be expected to come down a little. Regarding the other things like Pradhan Mantri, that PM Kisan, I expect that there may be an increase in the amount of 6,000 which is being paid to the farmers through the DBD mode. I expect that there may be a little increase. Beyond that, I don't expect that there will be much bigger announcements. So if you have to think of the disinvestment, the disinvestments may be at a lower level. It may be they may continue to complete those announcements which were made in the current fiscal, which are still in the process. That is what I expect.
Amit sir, putting the same question to you on the floor here, just wanted to understand, because we have seen the government in the past, I would say 9-10 years, working on there's capital infusions happening, IBC was introduced, and several other measures. So just wanted to understand, like, how are you looking at the upcoming budget and how that would work for the banking sector?
Yeah, thank you, Jinit. So my take on the vote on account budget is that what Mr. Krishnan said, that will be, I can see continuity in terms of policy framework which was outlined in the last few budgets. Capex is going to be robust. I think there is a consensus among most of the economists over that. We have seen 10 lakh crore capex outlay last year, out of which roadways and railways alone were about close to about 5 lakh crores. So my sense is that that infra push will continue to be there because there is a stated objective. If we have to be a 5 trillion economy, and now people have already started about 25 years hence, and there is a number which is 26 trillion. My sense is that this investment in infra will continue going forward as well. Infra is a high gestation industry, so therefore you need to start much earlier to get the desired results. So, if I have to summarize this, I feel that infra is one big push. Of course, healthcare is another one. Sustainable green energy is one area where government is extremely focused. Rural, infra, digital infra. We have seen, India being the leader in payments. World is looking at us in terms of digital infra. So my sense is some of these priorities will remain on the table, and of course, government would look at how to continue bringing the momentum of the domestic demand growth, while at the same time managing inflation. You know, I think the other thing which I would like to add here is that there is a good tax collection. Today we are looking at tax collection to the GDP, probably multiple decade high. So that will give the government a good headroom to do, certain steps towards fiscal consolidation. So I think if I have to summarize, I would summarize it in this way.
Right, right. Vinod sir, just wanted to get your thoughts here as well as to how is a South Indian bank looking at, challenges in the banking sector in the past few years, and also how do you see that the government will look at combating those challenges and also looking at the growth here?
Coming to the banking sector, now, in short, regarding the first point is the budget perspective. Most of the points which have covered, I would put it in a simple word that the government would continue. The word is the thing would be on continuity of the project, both on implementation and the execution, which they have extremely done well. Which there will be continuity in terms of infrastructure, and the focus would be what Amit said, that digital infrastructure that would gain importance, and that is more important from banking perspective, because we see there is a competition coming up from the fintech companies, which is eating away into the pie which banking has. Secondly, from a budget perspective, we feel that as a treasury, I think focus, though it is a vote on account, market would be looking at the gross borrowings of the government and net borrowing. One should congratulate banks for managing the asset quality, which has, over the quarters, if you observe, the NPAs and the gross NPAs have been coming down.
So now I'll move to Mr. Pan. So, sir, what's your outlook for upcoming budget? Also, how inflation will behave in next quarter? So, your comments, sir.
Yeah, okay. So I think definitely, even though it is a pre-election budget and it's a vote on account budget, no doubt. So I'm not really expecting any big bang policy measures. Indeed, most of the policy announcements by the current government has been done on a continuous basis, and they don't just wait for the budget to make policy announcements. So this budget being an interim budget, I don't expect any major policy announcements to happen. However, as the government lays out the numbers for the next year, the direction in terms of their strategic thinking should continue. And as some of my previous speakers have also spoken, I think the rural piece will continue to remain important from a more social development perspective for India, and how income inequality or the big gaps that exist everywhere between the rural and the urban, that closed down over a longer period of time. That, I think, is the focus of the budget, and which the government has quite decently taken on itself over the last few budget making exercises. But one of my speakers also spoke about infrastructure. I do think the focus on infrastructure will also continue. But I think the extent to which infrastructure expenditures had been extending over the previous few years, the growth for the infrastructure expenses and the capital expenses will probably be more muted in this round, because they also have to credibly signal to the market and the rest of the world, especially in the context of getting included in the bond index, a consolidation towards the 4.5% by the financial year next to next, which is the FY26. So there has to be a very strategic thinking about how they would want to do that, and that will probably limit the pace at which capital expenditures would increase in the current budget compared to the previous budget. So that's the other piece that I'm sort of very clearly looking at, because pressures on the revenue side will continue in terms of the interest payment. So that's a big worry overall in terms of how revenue expenses happen. With oil once again showing a significant amount of volatility, and the Brent is around the 83, 84 levels at this point in time again. And assuming that there is very little that can happen in terms of cooling off of the geopolitical worries which leads to oil prices volatility, there could be larger amounts of expenditures compared to what we are anticipating at this point in time in terms of the fertilizer subsidies and also on the food subsidies, given that food prices globally continue to be on the higher side. In terms of the inflation expectations that you asked for, we are looking at a softer average inflation for the next financial year at about a 4.8% compared to a likely average of 5.4% in the current financial year.
Okay. Now I'll come back to Mr. Mohan. Sir, we have seen that in last few quarters, almost all banks have seen a two-digit growth. So do you think how long it will sustain, or what's future do you see on this part?
Yeah, Harsh. I mean, if you look at the GDP growth, I think we are having above 7% growth. Last year, this year also around 7.2, 7.3. What else should we expect? Because there are growing aspirations, and therefore there is demand of credit which is growing.
As the GDP is an excellent growth pace, I expect that the bank's business, the credit portfolio will also increase proportionately. That is what I expect. To take that business, whether the banks are prepared is the question one. Yes, as I was telling earlier also, the banks are prepared. In a sense, all the banks are now very strong. The balance sheets are clean. You may recollect that the cleaning of balance sheets were taken up by the regulator somewhere from 2015 onwards. And all the balance sheets are very clean. They are strong. They are capitalized to a great extent. When there is a capital on the one side, when there is a good GDP growth, naturally the bank growth will also be there. So I expect that the growth will continue to be there.
So what kind of challenges do you see at the present time?
See, as I said earlier, looking at the quarters, the banking sector has been doing extremely well. Now, as Krishna sir said that, and also Amit also was saying that it's a banking sector has a direct correlation to the economy, so which is doing extremely well, and it is anticipated to be doing well in the coming year too. What banks challenge, of course, the credit growth, which is Krishna sir has talked about. I think banks have been doing well. Now the focus has to be on the name. If you see the names of the banks till now, the results which have been announced, there has been some decline in the names portion.
Pan sir, I'll come to you. So amid the global economic slowdown, so what's the impact on Indian economy? Also, RBI is on repo rate part. It's status quo for last few policies. So when we can see some rate cuts?
I think the global economy, especially the US, is still doing pretty well. And despite all sort of calls of a very sharp slowdown and debate on a soft landing versus hard landing, we are still looking at a soft landing in the US. From that context, and even though in India, we have shown a huge amount of resilience, we would expect the domestic economy to slow down in line with the global economy. And also given the tight financial conditions that we have, especially also on the liquidity side. Now, my bet is that with no rate hike chances that may be there, and yet inflation continuing to be higher than the 4%, the preferred direction or the preferred way that the RBI would be wanting to keep the system tight is again the liquidity. I accept that the liquidity is extremely tight at this point in time, but to a certain extent, we expect some amount of government expenditure by the end of the month to ease the liquidity pressures. But it will continue to remain tight because the feeling that I have is that the government is also not spending in the same breath that they should have, possibly to show up a significant correction compared to even the budgeted estimate for FY24 in terms of the fiscal deficit GDP. So these are some of the things that we would want to sort of look through. And given that sort of a situation, I think despite all the I think the internal issues that we have in India, for example, rural growth continuing to be on the softer side, growth continuing to be driven by the government's expenditure and also consumption from the urban side, we should see a 6.7 to a 6.9% growth in the next financial year. That I think is the belief that we are carrying at this point in time. But having said that, again, I think the headline number is good. But if we have to build a nation which is strong enough and show a sustained growth momentum, some of the micro factors which include the income inequality across the country, those are a few factors that the government would now have to look at.
Yes, since you are talking about the digital infrastructure but sir, at the same time, we have seen the cyber security issue has also increased in the talk of the town. To understand this, sir, what's your take, Krishnan sir, and how we should tackle this thing? Because we have seen in the banking sector, it is a new threat coming to this sector.
See, as far as the cyber security is concerned, it is something like which will always be there and one has to fight with that. So most important is, apart from building a resilient security structure, there is a need to continuously educate the public at large and the customers of the banks in particular towards the cyber security threats.
So what will be your take on this, sir? How we should fight against this issue, sir? Cyber threat.
See, cyber threat is a reality, and therefore one has to be in terms with the reality. That is number one, which means that we must first recognize this as a big area of investment.
I wanted to understand one thing that we saw in the past few years that the government has done through the union budget. So that I think is basically the introduction of the insolvency code, the insolvency and bankruptcy code that the government brought in. I just wanted to get a sense from our panelists here, because when the insolvency code was brought in, we saw a lot of excitement, because what we have seen over the years that IBC initially was working very well for banks, but from the past few years we have seen that the recovery has been very muted, and in terms of what data has shown is that it's also going slow.
As you were telling that initially we were able to see good recoveries, and it has slowed down now immediately on its rollout of the IBC scheme. However, I should also say that this needs some stabilization. The stabilization time is required for the scheme. Yes, there are cases where we need to have more number of people to attend to this, so that the NCLTs will be able to dispose of the cases quickly. It should not be like any other one where the cases are filed and pending for years. So I hope that the government will be focusing on this to reduce that time on this.
Some commentary from RBI and industry veterans where they have suggested that there's a need to there is a need to bring in some changes and some reforms in the insolvency code because of reasons that there's data there. Krishnan sir highlighted that the growth has been very slow down when it comes to recovery of loans. That's been very slow. So wanted to get a sense as to how you look at IBC as one of the leading banks of the country here. So what we want to get a sense from you as to what are some challenges that you face when you go through the insolvency code.
If you see the operational and the implementation part is where we are seeing some discouraging trends coming up, where you see the conflicts or the arriving at a consensus in terms of consortium banks.
And in the last few months, we have seen one of the major headlines about the CEO's salary. Krishnan sir, you are also the MD of one of the PSB public sector bank, and right now you are the MD and CEO of one of the private sector bank. So there is a huge difference between the largest public sector bank and the largest private sector bank's CEO's salary. So how do you see, does it also discourage CEOs while working, and what's your comment on this?
I have been a public sector banker for 40 years or so. I don't think that ever the compensation was in the forefront for any of the CEOs, which has come on the way of the discharging the duties and taking the decisions. But I'm sure that going forward, there will be deliberations so that these types of differences can be ironed out. That is what I expect. But the public sector, I hope that the years to come, it will change on the remuneration part also.
So just to wrap up this conversation, just one line comments from each of our panelists I'll start with Mr. Pan sir. Your expectations from budget in one line.
A very credible one with a clear direction towards fiscal consolidation because growth has more or less stabilized, and need for any measures to directly push growth is unwarranted.
Yeah. Next, Mohan sir.
So continuity of policy. I continue to see push on capex, also to spur up the demand while managing the inflation. And yes, I agree with Mr. Indranil that fiscal consolidation is also something that one would look at, going forward.
Yeah, Vinod sir.
Yeah, continuity of fiscal prudence, more focus on development, infrastructure-related projects, and of course, digital awareness in the country.
Yeah, Krishnan sir.
Yeah, this will be another excellent interim budget with focus on continuing the schemes and the policies which have already been put in place. There will be focus on the capex. There will be focus on the drive of the agriculture and rural economy. There will be a focus on the digital infra also.
So our honorable guests highlighted that there will be focus on capex, there will be more push on digital infrastructure, more on rural, MSME. So these are some of the highlight points which our guests highlighted for the interim budget. Let's see what will come on February 1st, 2024.